kings and queens, it's your girl Kayla DeReese. If you're new to my channel, welcome. If you're returning, what's good? Happy Wealth Wednesday, peeps. I hope that you all are having a fantastic Wednesday thus far. As you guys saw by the title, today I just want to touch on the basics of a balance sheet and touching on, in greater detail, assets and liabilities. If you saw my What is Financial Planning and the financial planning process video a few weeks back, I kind of touched on assets and liabilities, but I asked if you all wanted me to go into greater detail on it. A couple of you all said yes, and messaged me and said yes as well. So this video is basically all about assets and liabilities. If that interests you, make sure that you continue watching. Let's jump straight into the details. All right, so what are assets? Assets are resources owned by individuals, companies, countries, etc. In order for these resources to be considered an asset, they have to hold some sort of economic value. Two main types of assets are both current and non-current assets. Examples of current assets would include cash, accounts receivable, so paying clients for goods and services, inventory, prepaid expenses, and marketable securities. Non-current assets, on the other hand, are a company or individual's long-term investments in resources. So their intellectual property, their brand, their patent, their copyright, their trademark, real estate property, as well as any other items that are in fact assets but cannot be transferred into cash easily. So therefore they are not liquid assets. Does that make sense? Okay, so now that we've gotten the basics of assets down, so current and non-current assets, I kind of want to touch on liabilities. Simply put, liabilities are debts in which one owes, whether it's for personal or business. Some examples of liabilities are loans, earned and unearned premiums, mortgages, accounts payable, and accrued expenses. So expenses that are recorded prior to them being paid off. And I will be sure to insert a clip so that you can see an example of a balance sheet with the assets on the left and the liabilities on the right, and just kind of how that looks when you're actually filling out a balance sheet so that you can see what that looks like. Just an example for your business. All right, guys, so now that you get a feel for what assets and liabilities are so that you can calculate your own personal balance sheet, I just want to touch on one more thing before I end this video, which is equity. And essentially, equity is just the difference between your assets and your liabilities. So when you calculate on that balance sheet all of your assets and all of your liabilities, you're going to subtract all of your liabilities from your assets, and what you're left with is your equity. Equity just refers to the amount of capital that you have contributed. All right, kings and queens, I hope that this breakdown was helpful for you, or at least informational. I really wanted to go into a little bit more of a detail after my financial planning video, because I think that when I was trying to do that video, because I wasn't focusing on assets and liabilities or balance sheets and equity, blah, 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 I kind of rushed through it, which made it kind of confusing. So I hope that this was a little bit more of a clarification. All right, guys, that's all I have for you all today. Please don't forget to give this video a big thumbs up. Also, comment down below if it was helpful for you at all. If I missed anything that could be helpful for myself or someone else, please don't hesitate to drop that in the comment section down below as well. As usual, guys, thank you for watching. I appreciate all of your views, your likes, your comments, your subscriptions. If you have not done so, please hit the subscribe button down below, tap the notification bell so that you don't miss any other Wealth Wednesdays, and I will see you for the next one.